Full Truck Alliance has all the hallmarks of notorious Chinese round tripping schemes that we've seen before. We believe transactions might be overstated by as much as 10 times. We have several types of evidence that suggest there may be round tripping. Dozens of interviews in which former employees have told us in detail how, when they were at YMM, they set up shell companies designed to round trip cash. Former salespeople describe several methods they'd used. One, setting up shell companies and using money borrowed for 1 week to make it look like those companies were clients. Two, using associated companies to place orders to their own trucking fleets in order to help YMM pretend that the orders were for independents. And three, booking a second transaction for every real shipment. They called this a midpoint transaction because the salespeople would book the phantom shipment to a midpoint between the origin and destination of a shipment. The company's own disclosures only make sense if you assume round tripping. For example, by YMN's own definition of gross transaction value, the company paid just over 1/10 of what it should have paid in 2021. So either they underpaid or GTV is exaggerated. On the balance sheet, there are a lot of questionable acquisitions, about 185 million US dollars in write-offs. This could potentially be a balancing item for income statement inflation. A couple of egregious ones. YMM wrote 710 million renminbi off for a company called Guangzhou Zhihong that Zhihong executives said was almost dead at the time the loan was made. But just months later, the chairman of Zhihong made a big investment, supposedly for the same amount as was written off, and YMM got no part of it. There was also a 1 billion renminbi investment in an autonomous driving company called Plus AI. Plus AI claimed it had 7,000 pre-orders, then admitted that 6,800 of those orders came from YMM and its subsidiaries and were unconfirmed. Next, the business is deteriorating. We expect the tax breaks that some localities offer on the VAT on trucking will be phased out soon, and that would basically erase YMM's competitiveness. There are a lot of insider sales, as we wonder if those insiders might know that the business is getting weaker. After all, the PCAOB has recently gotten access to Chinese company accounts and now is reviewing audits by YMM's auditor, a Deloitte affiliate, which the SEC recently criticized for letting clients audit themselves. There are other risks too numerous to go into: an undercapitalized loan business, regulatory problems, weak internal controls. YMM has been involved in building logistics parks, buying and selling trucks, working with trusts to extend loans, and much more. In sum, we think YMM is grossly overvalued.